Welcome to Wealth Creation Series, where we learn and grow together with one goal, the goal of creating wealth. If you like this video, please hit like and subscribe to this channel. Alright, so in this week's episode, in part 1, we'll talk about the latest news which has happened this week, and in part 2, about various streams of income because that's what we like to do here on this channel and talk about how can we have multiple streams of income. So let's start. The first big news we have here is Dominion Energy selling a big part of its business to Warren Buffett's Berkshire Hathaway, and how it has affected the stock price of Dominion Energy. After that, we have US, which is planning to ban the TikTok app, and then Tesla, which is now promising that the automation level 5 is coming soon, and Bed Bath and Beyond is planning on closing 200 of its stores because of the COVID crisis. Warren Buffett finally made a purchase of a company in what many are calling it a drought season for Berkshire Hathaway. It's Berkshire's first major purchase since the coronavirus pandemic and subsequent market collapse in March. Berkshire Hathaway, which is Warren Buffett's company, purchased a large part of Dominion Energy. Dominion Energy sold off their gas assets, which made up 25% of their operating earnings. So 25% of their profits sold off. The shareholders didn't think that it was a good idea, and so did I. And I also hold the shares of this company in my portfolio. So let's go ahead and see why Dominion Energy sold off a part of their business and their rationale behind it. Thomas F. Farrell, Chairman, CEO and the President of Dominion, said, "This narrowing of focus will also allow us to increase our long-term earnings growth rate guidance by around 30%. This transaction represents another significant step in the evolution of a company, allowing us to focus even more on fulfilling utility customer needs and positioning us for a bright and increasingly sustainable future." What Berkshire will get out of this deal would be a transfer of more than 7,700 miles of natural gas transmission lines from Dominion to Berkshire, including about 20 billion cubic feet per day of transportation capacity, 900 billion cubic feet of operated natural gas storage, with 364 billion cubic feet of company-owned working storage capacity, plus partial ownership of liquefied natural gas export, import and storage facility. Now let's see what Dominion will get out of the deal, which is 9.7 billion in total, including a cash payment of 4 billion and assumption of 5.7 billion of debt incurred by gas transmission and storage segment of Dominion. This cash payment of 4 billion will be used by Dominion for share buybacks. I am not in favor of share buybacks, and I think they make money for the company at the cost of shareholders. In addition to this, when you look at what they are going to do with the dividend, is that the company now expects to target an approximately 65% payout to be effective upon completion of the transaction. So they are going to decrease the dividend to lower the payout ratio, and then they go on to say, beginning of 2022, the company expects annual dividend per share increase of approximately 6%. This represents a significant increase from the previous long-term dividend per share growth guidance of 2.5%. If they are just going to cut off the dividend just to start over, how is it going to help any dividend investor like me? The company I look for are companies which grow dividends and can continue to grow them. I see this as a very negative for the company. The idea of cutting dividends and then saying that they could grow it again at a faster pace sounds ridiculous to me. So to wrap it up, Dominion Energy sold off a profitable business which accounted for 25% of the profits, lowered the dividends, and sold off assets which are really hard to create with store and transport resources today, especially when it's very hard to create such assets just because of the sheer efforts it takes to create a system like that in today's regulatory environment. Just look what happened to the Dakota Access Pipeline. Also, we look at the stock price, we see stock price has fallen more than 10%. The shareholders did not take this news in a good way. They could not understand the reason for this deal. Surely Dominion was able to lower its debt by a little, but I feel Berkshire Hathaway got a really good deal and Dominion Energy lost. This makes me question the management of the Dominion Energy Company. Now, moving on to TikTok. Now, this company has a lot of controversy around it. It's a very popular social media app and it's owned by a Chinese company. In the US, social media apps like Facebook and Twitter are having their own issues just now, but they are US companies at least. Companies which are governed by US laws. This is because the controversy over TikTok of using user data. The Trump administration is apparently considering a ban on Chinese social media apps, including the popular video app TikTok. Secretary of State Mike Pompeo mentioned the possibility on Tuesday, saying it was something we are looking at in a Fox News interview. Other countries like India are also talking about banning TikTok and other apps from China, but they are doing it because of political disputes with China. There is news that even Australia is considering banning it. However, I feel that this should not come as a big deal considering all the top US websites and social media services are banned in China and we would be doing just the same to them. Now about Tesla. Elon Musk virtually attended a World Artificial Intelligence conference in Shanghai where he said that he was extremely confident about attaining level 5 autonomy and he thinks that Tesla is very close to achieving it. This is a big deal because level 5 is the highest level of autonomy in the cars, which means that the car is basically able to self drive itself without any input from the user. This level of autonomy gets Tesla way ahead of its competitors. The Tesla stock even higher. You could see here that few days back Tesla had broken the $1,000 barrier and it was up on its way. And now it has reached over $1,300 going towards 1400. Bed Bath and Beyond announced that they are going to wind out 200 stores over the next 2 years. This is because of the closures due to coronavirus in the past 3 months and because of which the sales have fallen down more than 49%. Bed Bath & Beyond currently operates over 955 stores. The company hasn't announced which stores it will be closing, but because of the news, the shares of Bed Bath & Beyond fell down more than 22%. Now in the second section of this episode, we'll talk about various streams of income. Most of us want to increase our income so we can enjoy a better quality of life, spend more on things we love, save more, and let the power of compounding help us towards our retirement goals. One difference between the rich and poor is that the wealthy have many sources of income. Even if one of them stops, they can rely on others to take them through the tough times without having the pressure on their mind. I'm sure most of you are here because you recognize this need, this urge of financial freedom where you are living a fulfilling life. The first one is earned income. Earned income is where you are getting income from a job. This is where you go 9 to 5 every day of the week to earn a living so that you can feed your family and live a comfortable life. However, it's not wise just to depend on just earned income. Earned income is good to start with. However, you should try to create multiple streams of income so that if you ever come in a bad situation like what we are currently experiencing from this pandemic, you have that income to fall back on. And as a result, this Earned income is really important to begin with, but most of us should try to move on to a second source of income which could help us in difficult times. This next income is from profit. It is from buying and selling. For example, you could buy sell stuff and say you have a t-shirt which you can buy from the manufacturer at $5 and sell it to the wholesaler or the retailer for $10, and now you have $5 as your own commission as a profit from the sale which you've done. This can also be used for a side hustle. I know people who go to the thrift store, buy things from there at really low prices and then sell them on websites like eBay in order to make a commission. Some people also buy used clothes and sell them back online on websites which sell used clothes as well. So that's also a side hustle which people can do and could be lucrative if you have the time to do it. Interest income is income which is generated from lending money. It could be interest from either when you put your money in a high savings account in your bank, or a better yet alternative I would suggest is going on websites which do peer to peer lending. These websites allow you to loan money to people at a much higher rate than what you would be getting from a high yield savings account. And these websites could be like a lending club and prosper, and you could start with as little as $25 to begin with. I'll leave links to both these websites down below the video, and I'm sure you could find more. These are just a few examples which I have on the top of my mind. The fourth stream of income could be residual income. Residual income is when you continue to get paid after the work is done. This includes royalties from books, movies, or songs, and also income that comes from real estate or business investments where you actually don't have to be present to earn it. A good idea for residual income would be, say for example, you are an expert in a particular topic. So you could probably make an online course for it and upload it on a website like Udemy. Once you uploaded the course, people come to the website and buy your course, and that way you can make money. It's scalable and you don't have to put a lot of effort into it once the course is already done. You might need to update it sometimes to keep it relevant, but that's also a good source of income. Dividend income is income from owning stocks, and it is my favorite source of income. You get money for investing and holding a stock in a company. It also has many advantages. It's taxed at a much lower rate than a normal income tax what you'd pay when you earn salary. It's also a truly passive form of income where you don't need to do anything. I could probably be anywhere traveling, I would be watching a movie or at the beach, and I'd still be making money. I'd still be making money and earning, and it would be coming in my account regardless of whatever I'm doing. So it's a truly passive form of income which I love. It also helps me to buy more stocks from the dividends which I collect, and kind of helps create a snowball effect. At the end, also, the other advantage would be that you kind of get the appreciation of your stocks as well as the dividends, which kind of creates the compounding effect. The next stream of income is rental income. We all are kind of familiar with it. You buy a property, and then you get renters in it, and then you get the rental income out of it. The next stream of income is capital gains. It is when the assets increase in value. Say you buy a house worth 100,000 and then you sell it for 150. What you gain is the gains on capital, which is $50,000. And this is how what is known as capital gains when your asset appreciates. It just does not apply to house only, but anything that kind of appreciates in value. It could be stocks, it could be antiques, it could be many things which appreciate in value over time. Alright, so this is it for this week. I hope you liked this episode of the Wealth Creation series. I will bring in more ideas for financial success next week. If you did like the video, learned something new, or just enjoyed listening, please give me a thumbs up by pressing the like and subscribe button. I make these videos for entertainment purposes only. I am not a licensed advisor. Please do your own research before investing.